Our next guest says there are 2 names you can still buy, 1 you should sell. Let's go off the charts with Chris Verrone of Strategas Research Partners. Hi, Chris.
Hey, Melissa, how are you? Yeah, and exactly. We brought along 3 names with us today, 2 longs and 1 short. We'll start with the long. This is Home Depot. Over the last 2 years, here's the chart. I think what's important, when you go back 2 years ago, test the 200, resume higher. Last year, test the 200, resume higher. What's happened here over the last 5 or 6 months? We had a 20% drawdown right to the 200. We've held, we've reaccelerated. We've now held the 50. Last tick on this about 197. We think ultimately a 220 target is appropriate. And importantly, Home Depot relative to the S&P 500 is still very much in this uptrend. So the absolute trend is good, and relative, it is still a leadership stock here. Let's go to Apple, biggest stock in the world, most important name. We think it's okay here. Another name that's right in this 190 range. It's held the 200. It exploded off the 200 back in May. It's held all the big levels. It made new relative highs only about 4 or 5 weeks ago. So we still think this is leadership. Look to maybe a 210 target going forward. And then on the short side, not everything here is perfect. McDonald's does worry us right now. I think most importantly, this is just not a leader. Big relative top versus the S&P, made 4-month relative lows today. And unlike those other 2 names, what McDonald's has not been able to do is retake the 200. So you had the 20% drawdown, has not been able to reclaim resistance, though. That's a problem here. We like Home Depot. We like Apple. McDonald's is a sale.
Chris is going to come over. We've got some questions for Chris.
Yeah, we do.
Come on over, Chris. Michelle will bring the chair in. Thank you, Michelle. Now, Chris, as you know, we have very astute viewers of Fast Money.
Yes.
And I'm sure people out there saw Carter Braxton-Worth yesterday at the Plasma, who talked about Apple and how there was more downside to come. He showed the exact same chart in terms of Apple above and then relative to the S&P 500 below. And then what he also did was he did ex-Apple.
Sure.
And what we saw was real underperformance of Apple, which led him to the conclusion that there's more downside here, or there is downside to come for Apple. So how are you guys looking at the same charts and coming up with completely different conclusions?
Let's think about it this way.
They're both in the pantheon, so it's the battle of the pantheon. Yeah, okay.
We're talking about the biggest stock in the world right now, right? It has been a source of safety in an otherwise challenging market over the last 4 or 5 months. So let's give it some bonus points for that, right? It's provided a margin of safety. If you look at the bar going into earnings, I think it's very low. The number of analyst buy ratings on Apple right now is the lowest since the lows in 2009. So the analysts are pretty bearish going into numbers in 2 weeks. I think that sets the stage for this stock to rally. We made new relative highs versus the S&P just 4 or 5 weeks ago. That's a stock that still sounds like a leader. I recognize it's paused here the last week or 2. I think ultimately that gets resolved higher.
So my question is on the relative strength versus the S&P. It's paused here. If that starts to outperform, is there information embedded in that? Does that mean that people have to own it? If analysts are bearish, if it starts to do relatively better than the S&P 500, I would think it's a massive breakout and you get a panic buy.
Yeah, I'm right there. And I think what's telling about the name is before earnings every quarter, you hear the same stories. Peak iPhone, peak growth, peak margins. They manage a way to surprise on the upside, and I think that's going to be reflected in the price in the weeks and months ahead. But I think when you put this in context of the market, right, largest stock in the world, it's probably not a bearish development for the broader market that you have Apple hanging in here in a relatively challenging tape. We know how bad the headlines have been. The stock's traded well.
So last quick question, Chris, and I'll kick to you the question I posed to these guys. S&P 500 at near 2,800. Breakout or fake out?
It's a breakout. I'll tell you why. We made a 65-day high today on the S&P. It's the first time we've done it since January. I'd put Wells Fargo in that camp. That's quality gotten better. I'd put Freeport in that camp. I'm a little bit skeptical of Biogen here. There's probably some other better names.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.